Global Wall Street's paid a lot of attention this week to those CPI numbers that came out for the United States. Some people are, if not declaring victory, close to declaring victory over inflation. Are they premature?
Look, those were good numbers. Those were better numbers than I would have expected, better numbers than I think most people would have expected. And I think inflation performance has been more favorable, certainly than I have expected over the last year. And I've thought a lot about that, David, and I think there are two or three factors to emphasize. The first is that policy has been much tighter than was anticipated. In July of 2022, markets were assigning a probability of under 10% to the level of tightness in policy that we have seen so far. So more tight policy has led to better outcomes on inflation. That doesn't mean inflation fears were unwarranted. It means that people took the fears seriously, which was good. I think that's one important aspect. I do think that given how strong the economy has been, there's still a surprise in what's happened to inflation. And that, I think, has to do in part with transitory factors that were pushing inflation up from bottlenecks that are now mean reverting and are pushing inflation down. So I think there's been a little bit of prematurity in some of the declarations of victory. And I'm not sure the inflation figures over the next 2 years are going to be quite as favorable as the market is expecting, especially in light of the geopolitical risks around oil and some other commodities. So we'll have to see whether we're really able to get down to 2% quite as easily as many people imagine. And that's an aspect of this situation as well. And I think the third thing to say, David, is we don't really have a completely clear sense of where the economy is right now and where it's going. So I still think a soft landing is a difficult outcome. It still would not be my prediction, even as I'd recognize that it looks more plausible today than it probably did 6 months or a year ago.
More plausible, but there are those economists who are warning that some indicators actually are tipping more toward recession than perhaps the markets are anticipating. For example, the SOM rule, which is one measure of it, is not that far away from actually pointing toward recession. And there are other indicators as well. What is the risk right now of a recession in the first half of next year?
It's certainly under 50-50, David. I think it's probably on the order of 25% that ultimately something will happen which will cause the NBER to date a recession as having begun in the first half of the year. In general, when recessions come, we don't even know that we're in them till they've been underway for several months. So I think you got to recognize that as a real risk. On the other hand, with what we've been seeing in the employment reports, incomes are continuing to grow. So I don't think that is the preponderant scenario. I was a bit surprised when early in the week you saw retail stocks on fire, suggesting that the possibility of recession was coming completely out of the market. And that doesn't seem smart or wise to me as a market response. You know, I think that some people may have too much confidence in Mother Fed. They think that if inflation's low, then the Fed will be able to prevent any recession. Well, they should remember the speeches that they were giving rightly a year or two ago about how monetary policy operates with substantial lags. And so I don't know what is exactly in store, but to think that if something adverse is in store, it can be immediately and completely managed would, I think, be a real mistake.